Hi everyone, good afternoon, good evening, good morning, whatever time you're watching this. My name is Paul Tilley and welcome back to the Atlantic Business Trades Certificate Program. Today we're talking about financial management in business, and specifically we're dealing with Unit 3 or Topic 3 of the Financial Management section, Government-Related Financial Requirements. So in this unit, what we're going to be talking about really is the monies and the commitments that you need to make to ensure that you meet the government regulations as a small business person. So first and foremost, what I'd like to do is to talk about what we're going to be doing in this unit. Well, really, we're going to identify applicable government-related financial requirements and what we call source deductions, are basically deductions that you have to take out of your employees' paychecks to be able to send to the government. And then we're going to look at the remitting process. How do you actually send this? Okay, in terms of government remittances, and what are we talking about here? Well, if you pay someone a paycheck, so if you have employees and you pay a paycheck, you have to ensure that the government knows you exist and you registered with them, and that you submit the required remittances on time on a certain schedule. So if we think about this, you have to think about, how does this apply for me? Well, you're an employer if you have employees and you pay salaries or you pay wages. If you have an employee that gets paid tips or gratuities of some way or another, if you pay bonuses or vacation, or provide some sort of an allowance to your employees. So all these things impact on how much money you have to remit to government. So the first thing you need to do as a potential employer or as an employer is to make contact with the Canada Revenue Agency, or CRA. If you go to their webpage, and they have a very good webpage, you can register with them, and they in turn will send you what's called a business number. And this business number is your identifier, no different than an individual having a social insurance number, but a business number is the identifier for the business. And like everything we've talked about here on the separation of you and the business, government does the same thing. They separate you from the business. So the business will have an individual number where all of this information and required remittances will go. So, in order to get a business number, you need to go to the CRA website, and I'll show you what the website looks like now. Okay, so you'll see here that it's an online registration process. You can click through it. It asks you some basic questions, things like where's the business located, what provinces do you operate in, what's the business's name, the type of business that it is. These are the basic bits of information that the federal government require of you as an employer. Now, in terms of what you need to send to them or how you end up figuring out how much you owe, you got to think about, well, what are some of the basic things that employers need to collect? Well, first of all, there's something called the Canada Pension Plan. The Canada Pension Plan is set up by the government, and employees pay into it and employers pay into it, goes into a pool so that when people retire, they will receive some benefit. You, as an employer, then need to make your contribution to the Canada Pension Plan, but also you're going to be responsible for collecting the employee's portion and submitting it as well. So you're going to put in $1, they're going to put in $1, you in turn are responsible for paying $2 to the Canada Revenue Agency for those collections. That's the first one. The next one deals with provincial and federal income tax. The federal government collects taxes on behalf of the province and on behalf of themselves. What you do as an employer is you figure out each of your employees, and there is a method there, and I'll show you the website there now. If you look at the federal government website for income tax, you can calculate how much an individual should have deducted from their paycheck in order to pay the tax. Now, You don't pay anything towards the tax, the employees do, but your job is to collect that portion, hold it in trust, and then send it to the federal government each month. You're also responsible for collecting funds, or the required payments, for employment insurance. Now, employment insurance is kind of an interesting one. You pay some and the employees pay some. So what you have to do is, as the employee gets paid, so you have the paycheck, you make a deduction from the employee's paycheck of, let's say, $1 for employment insurance. Now, the numbers that you actually use would depend on how much the employee makes. And again, the Revenue Canada site that I'll show you will show you exactly how much you have to deduct for each person. But suffice to say, you're going to contribute to it as well. And what your contribution is $1.40. So effectively, the employee pays $1, you pay $1.40. So you're responsible for collecting the employee's portion and your portion. So effectively, you're going to be sending $2.40, $1 plus $1.40, to the federal government for the purposes of employment insurance. Another deduction that you'd have to make would be for not so much the federal government, it's a provincial entity. It's called the Workplace Health and Safety Commission, or Workplace NL now. You're responsible as an employer for determining what category of business you fall in, and you're also responsible then for paying a premium as opposed to a tax, but you're paying a premium to insure your workers, and this is what workers' compensation is all about. So depending on the type of industry, you will pay that premium. Now, you can go to the workers' compensation website, Workplace NL, and I'll put it up on the screen there now to show you where it is. You can figure out how much you have to pay, and you will make that deduction from, you will basically incur that expense. You will make a deduction from the employee. You will figure out how much you have to pay per employee per dollar of wage. It works on the payment for workers' compensation works on every $100 of pay. So there is a calculation that has been made based on how much pay you're paying, and you will pay that amount to the Workers' Health and Safety, Workers' Compensation, Workplace NL, whatever you want to call it, the Workers' Compensation Commission. Then you will be responsible for paying that. So that's another remittance that you'd have to make. The other big issue that companies face in terms of remittances that need to go to government, it's for the collection of taxation from sales. Okay, here's how the basic tax system works in Canada. We have something called a goods and services tax. So GST is the terminology. And all the goods and services tax means is that if a business buys something, say, I don't know, new furniture, it pays tax on that. It pays the HST. No different than you or I going to the store. You're going to pay a certain amount of tax. The business will also be responsible for collecting HST or GST from the sale of its products. So as it sells something, it will collect tax. So we have collections coming in, deductions going out, or money going out as you buy stuff. What the federal government wants you to do is to determine how much you've taken in, how much you've spent, get the difference between the two, and that's the amount that you will owe to the federal government. So it's a net tax. So effectively, you pay taxes on stuff you buy, you collect taxes from stuff you sell. The difference between the two is what you owe the federal government. This is a lot of paperwork for small businesses, but the government expects you to do a good job at recording this, and the amount of money you pay will be based on that simple calculation of how much paid and how much you owe. Okay, so that's how the harmonized sales tax works in its very brief overview. Now, there are little intricacies to the harmonized sales tax in the sense that some items are taxable and others are not. Groceries, for example. When you go buy groceries, you're noticing you're not paying the HST or the GST on groceries. That's because groceries are considered as zero-rated items. If you're in the grocery business, you are not collecting HST on groceries. On things that are not groceries, yes, you are responsible for that, but most of your product will be groceries. You're not collecting HST. However, as a store that is there doing this, you've got to buy insurance, you've got to turn on the electricity, you've got to heat the place, you've got to pay your, all of the expenses. You do pay HST on a lot of those expenses. So the way that this works is that you're not collecting any, so your collections are zero, and your expenses are for taxes are fairly high. So again, you just simply figure out what the difference is between zero and how much you paid, and what you'll do is get what's called an input tax credit. In other words, the government will owe you money, okay? Between the difference between what you collected, which was zero, and what you paid would be the input tax credit. It's important to be able to track what you're paying your taxes on. The final category of taxation is called exempt supplies. Now, certain products are exempt. Education, for example, is exempt. The thing is with exempt products is you don't collect any tax, similar to zero rated, but the thing is you can't claim a tax credit on it either. So, it gets into the finer point of accounting. But the fact of the matter, I don't want you to get so bogged down on whether things are or are not rated a certain way. I want you to appreciate that certain items are taxed and certain items are not, number one, and that you pay your tax based on how much you collect versus how much you spend, the net. Harmonized sales tax in Newfoundland and Labrador, it's called a harmonized sales tax because it just means that the provincial and the federal government have coupled together to collect the tax. In other words, it's 15% in Newfoundland and Labrador, 5% of that is federal, 10% of it is provincial. It's coupled together. Certain provinces, they just have a GST, meaning that they haven't worked with the federal government to couple it together. So there's a GST and a provincial sales tax, two separate items. In Atlantic Canada, we call it the HST because both of them are bundled together. It makes it simpler for small business. Okay, so that's a quick summary of this unit on remittances. If you have any questions, please let me know. Thanks for watching.